Why do most traders lose money right after clicking buy or sell? What if the real mistake isn't your strategy, but trading too early? The 1% don't predict the market, they wait for it. If impatience has ever cost you a trade, you need to hear this. The moment most traders sit down and open their charts, they are already on a path that leads to frustration and loss. And the reason is not what they think. It is not their strategy, it is not the indicators they use, it is not the analysis or even the time they spend staring at the screen. The reason they fail, overwhelmingly, is impatience, and impatience is a silent, invisible thief that robs them of opportunities they cannot even see they are missing. This is the first truth the 1% understand, and why they are consistently profitable when others are not. From the very first second of a trading day, most traders are reacting, not thinking. Every tick on the chart feels like a demand to act. Every small movement in price triggers a subtle anxiety in the mind, and this anxiety drives decisions that are automatic rather than deliberate. They enter trades too early, chase moves they do not understand, and exit positions they have not fully evaluated. Their brains are conditioned to seek action, because society rewards movement, not patience, but the market does the opposite. The market punishes impatience and rewards restraint, and this is the fundamental disconnect that separates the 1% from the 99%. The 1% do not see the market as a puzzle to solve every second, they see it as a sequence of opportunities to be captured selectively, and this selectivity is not laziness or fear, it is a conscious, disciplined practice rooted in psychology. When you observe elite traders, you notice a calmness, a sense of timing that seems almost unnatural to outsiders. They will sit for hours without touching a chart, without entering a position, and yet their mind is fully engaged. This engagement is not visible in clicks or movements, it is internal, strategic, and deliberate. Their patience is not passive, it is active decision-making. They are constantly filtering, evaluating setups against a strict mental checklist, and waiting until the probability is overwhelmingly in their favor before they risk anything. To understand this, you must first understand how the human mind reacts to trading stimuli. The brain is wired to respond to patterns, rewards, and immediate feedback. Every price movement triggers dopamine, gains give pleasure, losses trigger fear and stress. Most traders become addicted to this cycle. They are seeking hits, confirmation, and the rush of engagement, and this constant stimulus leads to overtrading, emotional decisions, and ultimately losses. The 1% override this instinct by creating a mental framework where the need for immediate feedback is irrelevant. They are detached from the emotional swings of the market, yet highly attuned to probability and risk. This detachment is not apathy, it is clarity. It allows them to see opportunities that are invisible to traders obsessed with movement. Patience in trading is often misunderstood. Many beginners think it is simply waiting, doing nothing, and letting the market pass. This is not patience, it is laziness, fear, or indecision, and it leads to missed opportunities and frustration. True strategic patience requires understanding when to act and when to observe, recognizing that every moment you do not trade is not wasted, but an investment in higher probability outcomes. It is the ability to endure boredom without succumbing to the need for action. It is the deliberate acceptance of risk without engaging prematurely. The 1% approach every potential trade with a combination of respect for the market, discipline in execution, and psychological control. They understand that entering a trade too early is more costly than entering too late, that the market will often offer multiple opportunities, and that missing a trade does not end the day or ruin their strategy. What differentiates them is not skill in analysis alone, but mastery over internal impulses, an ability to resist the pressure to participate in every perceived opportunity, and a clear framework for evaluating trades that includes patience as a key component. This framework is invisible to most observers, but is consistently applied, and its consistency is what compounds their edge over time. They also understand the psychological traps that plague average traders. FOMO, greed, revenge trading, impatience after a loss. These are all emotional triggers designed to break restraint. The 1% do not ignore emotions, they recognize them, name them, and make decisions independent of them. They view impatience as a threat to profitability and actively combat it with mental discipline. Every aspect of their trading day is organized to reinforce patience. They control exposure, they set precise criteria for entering trades, they define their risk parameters, and they allow the market to come to them rather than chasing it. Their edge is not secrets or systems that others do not know, it is the invisible power of restraint. Most traders overlook this because it is silent, unflashy, and counterintuitive. People expect profit to come from activity, signals, and speed, not from waiting. This misunderstanding is reinforced by marketing, social media, and peer influence. creating the illusion that constant engagement is valuable. The 1% recognize that the opposite is true. Inaction done correctly is far more profitable than action done impulsively. This realization is the foundation of their edge. Observing them is instructive. A trader who waits for the perfect setup often enters with confidence that seems almost fearless. They are never anxious, never panicked, and never desperate. Every decision is the result of a pre-defined process that incorporates patience as a core rule. For the average trader, this appears counterintuitive. How can doing less yield more? How can sitting out watching and waiting generate profit? The answer lies in the compounding effect of probability and risk management. Each poorly timed trade has a high likelihood of loss or reduced profit. Each perfectly timed trade, executed with patience, has an exponentially higher probability of success and a greater potential payoff. Over time, this edge accumulates silently, invisibly, and relentlessly. The 1% do not chase excitement or short-term gratification. They treat every trade as an experiment in discipline, every moment of waiting as an opportunity to reinforce psychological control. Their edge is psychological, strategic, and cumulative. Without this patience, no amount of knowledge, skill, or analysis can prevent losses. It is the invisible factor that makes the difference between occasional wins and consistent profitability. Understanding this principle changes the way you approach trading. You begin to see that missing trades is not failure, and observing the market without action is not wasted time. Strategic patience is a choice, a rule, and a mindset that can be cultivated, practiced, and mastered. Once internalized, it transforms how you see risk, opportunity, and the market itself. The first step in developing the 1% edge is awareness of impatience and its consequences. Once you recognize how often you act prematurely, you can start creating rules that enforce restraint. Every trade becomes a deliberate decision rather than a reaction. Every moment of waiting reinforces control and builds long-term profitability. This understanding, fully applied, separates average traders from the elite. It is not taught in schools, courses, or mainstream media because it is invisible, uncomfortable, and counterintuitive. Yet it is the most powerful skill a trader can develop and the foundation of consistent success. Strategic patience is the edge, and mastering it is what allows the 1% to consistently outperform, survive volatility, and compound profits over time. The single biggest myth that traps most traders is the belief that success comes from doing more. More trades, more screens, more indicators, more analysis. The 1% of traders understand this myth better than anyone because they have seen what overactivity does to the human mind and how it systematically destroys capital, confidence, and consistency. The average trader believes that entering a trade is the path to progress, and every minute they sit idle feels like lost opportunity. Every movement in the market triggers a sense of urgency, a subtle pressure that the mind interprets as a signal to act. Social media amplifies this pressure, showing endless feeds of trades, signals, successes, and supposed secrets, reinforcing the illusion that the key to profitability is constant participation. But the reality is the opposite. The more you trade without patience, the more you hand the market your edge, one impulsive decision at a time. The 1% do not subscribe to this belief. They do not need to fill every tick with activity because they understand that the market is not a race, but a series of selective opportunities, and only certain conditions justify risking capital. What looks like inaction to the casual observer is actually active mental work. While others are chasing candles, calculating moves, and reacting to every price fluctuation, elite traders are analyzing probability, observing behavior, and reinforcing internal discipline. This selective action creates leverage that cannot be achieved through constant motion. The mind of a top trader is calibrated to detect quality setups, to recognize when risk and reward align, and to ignore everything else. They understand that entering without alignment is expensive, and that every premature trade is a small erosion of capital compounded over time. While an impatient trader may open 5 positions in an hour, the 1% may open one with confidence that it meets their high standards, and the potential reward is far greater than the small gains captured by multiple impulsive trades. The key here is understanding that quantity is never equal to quality, and this is where most traders fail to see the invisible hand that controls their outcomes. By constantly forcing action, they are training their brains to expect movement as a reward, rather than profit, creating a cycle of emotional dependency that clouds judgment. Greed, fear, and the need for validation drive this behavior, not strategy. The 1% circumvent this trap by creating mental frameworks and rules that enforce patience. Every potential trade is evaluated against these rules. Does it meet the criteria? Is the risk acceptable? Is the probability in my favor? If not, it is discarded without hesitation. This detachment from immediate gratification allows them to operate with clarity. It is not that they avoid trades because they are fearful, they avoid trades because they are disciplined. They understand that profit is a function of probability, timing, and position sizing, not frequency. Every moment of inaction is a conscious decision, and each decision compounds their edge over time. What is often overlooked is the psychological advantage this creates. By refusing to act impulsively, elite traders reinforce self-control, confidence, and emotional resilience. They do not become slaves to every tick, they remain masters of their decisions. This internal structure allows them to exploit the market when conditions are favorable, while average traders are trapped in cycles of reaction and regret. The market is indifferent to your emotions, and understanding this is crucial. While the impatient trader is emotionally engaged with every swing, experiencing highs and lows of excitement and panic, the patient trader experiences calm focus. This difference in mental state directly impacts decision quality. Emotional overreaction leads to errors. Measured patience leads to calculated advantage. Strategic patience also creates a unique form of leverage time. By waiting, the 1% allow opportunities to develop fully, reducing exposure to randomness and increasing the likelihood of favorable outcomes. They understand that markets are probabilistic, and premature action distorts the expected value of trades. They are comfortable with boredom because they know that waiting is not wasted, it is preparation. Every chart they watch without action is mental rehearsal, reinforcement of discipline, and sharpening of perception. This ability to endure inactivity without anxiety is a defining trait of the elite. Many traders fail to recognize how subtle impatience manifests. It may appear as checking positions too frequently, adjusting stops unnecessarily, entering trades a few ticks early, or second-guessing decisions. Each small act of impatience may seem inconsequential in isolation, but compounded over months and years, it erodes capital and confidence. The 1% avoid this by creating rules that automate patience-defined entry criteria, precise risk limits, and an understanding of market behavior that allows them to disengage until conditions are optimal. This discipline is not innate. It is cultivated through repeated conscious practice and observation. The difference between the elite and the average trader is often not in knowledge but in execution. The average trader may understand strategy, technical analysis, or fundamentals, yet fail consistently because they cannot control the urge to act. The 1% have mastered this urge. They have reprogrammed their emotional response to stimuli. They act when probability and conditions align, not when impulse demands action. This mental calibration creates consistency, reduces emotional fatigue, and compounds advantage. Another overlooked aspect is confidence. Patience breeds confidence because decisions are made from a framework rather than reaction. Every successful patient trade reinforces the mental model, creating a feedback loop that strengthens discipline. This confidence allows the elite to maintain composure under market pressure, avoid revenge trading, and resist external noise from peers, media, or social platforms. Strategic patience is therefore both a shield and a sword. It protects against impulsive losses while creating opportunities for outsized gains. The market rewards those who wait for probability to tilt in their favor and penalizes those who force action against odds. Understanding this flips the entire perspective of trading from reactive to proactive. Observing the behavior of the 1% illustrates how patience compounds as an edge. Not only do they act on high probability setups, but they also avoid traps set by the market for the impatient. Losses that might ensnare an impulsive trader become opportunities to observe and reinforce mental rules. Every denied trade becomes a lesson in discipline. Every moment of stillness a reinforcement of control. Over time, this discipline compounds, creating a measurable, consistent, and invisible advantage. Strategic patience is not about perfection. It is about minimizing unnecessary mistakes while maximizing the impact of calculated action. While most traders focus on winning every trade, the 1% focus on losing less in situations that are not favorable and winning big when they are. This mindset is invisible, counterintuitive, and uncomfortable for most, but it is the foundation of their success. Without patience, no system, method, or technical skill can consistently outperform the market. This truth is simple, yet it is overlooked because it is silent, subtle, and counter to human impulse. Understanding, accepting, and implementing patience is what allows a trader to transition from reactive, emotional, and inconsistent to disciplined, strategic, and elite. The mindset of the 1% trader is the single most powerful factor in determining long-term success, and it is also the hardest aspect for most traders to comprehend because it runs counter to instinct. While the majority of traders are busy reacting to every market movement, interpreting every candle, and second-guessing every entry, the elite operate on a different plane entirely. They have trained themselves to detach from emotion, to see the market not as a source of entertainment, profit, or validation, but as a system governed by probability, timing, and risk. This detachment is not emotional coldness, it is clarity of purpose. The 1% understand that every impulse to act, every twinge of fear, every spark of excitement is a signal to pause and re-evaluate, while average traders are addicted to the dopamine hit of clicking buy or sell. The elite are addicted to the outcome of disciplined restraint, and this addiction compounds over time in a way that is invisible to outsiders. They view impatience as the hidden enemy, the silent thief of capital and confidence. It is this understanding that allows them to sit idle for hours, watching the market develop, without the pressure to act, without fear of missing out. Every moment of observation is strategic, every tick of price movement is data, not a trigger for action. Most traders misinterpret boredom as wasted time, yet the elite know that strategic patience transforms boredom into preparation. In these periods of stillness, they are mentally rehearsing potential scenarios, evaluating probability distributions, and reinforcing their internal rules. This is why the 1% often appear calm and composed while the majority are panicking and chasing the market. The psychological discipline required to maintain this state is immense, and it is cultivated through deliberate repetition and awareness. Unlike average traders who act first and rationalize later, elite traders observe first, analyze, and act only when alignment between probability, risk, and opportunity is perfect. They understand the market as a series of probabilities rather than certainties, and patience is their tool for tilting these probabilities in their favor. This is not a theoretical concept, it is applied consistently. Every decision to wait, every moment of non-action, compounds advantage over time. Observing their trades reveals a pattern. When they act, they do so with conviction. When they wait, they do so with purpose. The mind of the 1% is not cluttered with distractions, impulses, or fears. It is singularly focused on the intersection of risk and reward, timing and probability. This focus allows them to exploit opportunities that are invisible or inaccessible to the impatient trader. Emotional control is inseparable from strategic patience. Fear of missing out, overconfidence, and revenge trading are neutralized because the elite have conditioned their mind to prioritize probability over impulse. The market no longer dictates their emotions are calibrated to serve the decision-making process. This calibration is the edge. Every trader experiences the same market, the same charts, the same indicators, yet outcomes vary dramatically. The differentiator is not knowledge, it is mental discipline. While the average trader may recognize a high probability setup, their impatience drives premature entry or hesitation, compromising potential results. The elite, however, allow setups to fully develop, aligning their decisions with predefined criteria. Strategic patience also cultivates confidence. Confidence is not bravado, it is trust in the process, in the framework, and in the understanding that probability will favor disciplined action over time. This confidence reduces stress, enhances clarity, and allows them to maintain composure under pressure. Boredom becomes a sign of alignment rather than a trigger for action. Every tick that goes against them is irrelevant until conditions meet their rules. They understand that missing trades does not reduce long-term profitability, acting impulsively does. This principle is counterintuitive because human instinct rewards action. Society, peers, and social media reinforce the notion that doing something is better than doing nothing. The 1% break free of this conditioning. Their edge is invisible because it manifests in restraint, not action. The brain's natural response to movement is dopamine release, yet elite traders override this instinct. They create a mental environment where the thrill of waiting exceeds the thrill of clicking a button. Every moment of stillness is reinforced through practice until patience becomes reflexive. They also understand that risk management is inseparable from patience. Entering too early, under pressure, or out of boredom increases exposure and decreases expected value. The market punishes those who act outside of probability, and patience ensures alignment with risk-reward ratios. Psychological preparation and self-awareness are essential. Elite traders monitor their internal states as closely as they monitor the charts. They recognize the subtle signs of restlessness, the pull of fear or greed, and consciously adjust their behavior. This self-monitoring transforms patience from a passive state to an active skill. By observing their own impulses, they prevent mistakes before they occur. Average traders rarely recognize these internal triggers until it is too late, leading to repeated losses and frustration. The 1% use patience as a filter. Only trades that meet their strict criteria are considered. Everything else is ignored without hesitation. This selectivity is counterintuitive to someone who equates activity with productivity. They understand that the majority of market noise is irrelevant and that attempting to act on it leads to compounding errors. Each decision is deliberate, each moment of waiting intentional, and over time, this compounds into a measurable edge. Patience also enhances learning. By observing without action, traders gain insight into market behavior, patterns, and dynamics that impulsive traders miss. They internalize lessons passively, reinforcing understanding without risking capital. This observational skill contributes to the long-term development of intuition, timing, and confidence. The mind of the 1% is trained to see opportunity in the stillness and risk in unnecessary movement. They understand that trading is not about winning every trade, but about maximizing probability and minimizing regret. They act only when alignment is near perfect, allowing the market to work in their favor. Average traders, chasing action and excitement, compromise consistency. They learn lessons the hard way, through losses and emotional swings. The elite, by contrast, learn through observation, reinforcing patterns, rules, and probability. Strategic patience also reshapes perception of profit and loss. While many traders fear missing gains, the 1% understand that avoiding low probability trades prevents small losses from eroding long-term gains. They act as guardians of capital and probability, allowing opportunities to emerge rather than forcing engagement. This approach changes the entire psychology of trading. Waiting is not passive, it is a calculated act of control. By consistently practicing this mindset, they develop resilience to market fluctuations, emotional swings, and peer pressure. The invisible advantage of strategic patience lies not in tools, indicators, or systems. It lies in the disciplined, repeated execution of a mindset that prioritizes probability, timing, and risk over impulse and emotion. Mastering this mindset allows the trader to transform from reactive, emotional, and inconsistent to deliberate, composed, and elite. It is the foundation of the 1% edge. Strategic patience in trading is not merely waiting, it is a deliberate, disciplined framework that the 1% apply consistently, and understanding it fully is what separates elite traders from the vast majority who struggle. Most traders misunderstand patience as inaction, as avoidance, as fear of opportunity. But in reality, it is active mental engagement, a constant process of evaluation, observation, and preparation. The 1% approach every potential trade through a set of defined rules that combine probability, risk assessment, and timing, and they refuse to act until these criteria are satisfied. While beginners panic at minor price fluctuations, adjusting stops, entering trades prematurely, or reacting emotionally, elite traders maintain calm, letting the market reveal itself while they remain detached yet fully aware. This detachment is the backbone of strategic patience. It allows traders to act decisively when conditions align and avoid unnecessary risk when they do not. The psychological aspect is immense. Human brains are wired for immediate reward, and the dopamine hit from action creates a powerful bias toward doing something, even when doing nothing would be smarter. Social media, trading communities, and constant chart updates amplify this, conditioning traders to equate business with effectiveness. The 1% resist this by creating mental frameworks that define when a trade is acceptable and when it is not. This creates clarity, reduces noise, and allows the mind to operate efficiently. Strategic patience is not random, it is probabilistic. Elite traders understand that every trade has a likelihood of success based on risk-reward parameters, pattern alignment, and contextual analysis. By waiting for the perfect alignment, they increase the probability of success exponentially compared to impulsive trades. Every moment of patience is a reduction of exposure to uncertainty, a careful positioning of themselves for higher expected value. While average traders are trapped in the illusion that constant engagement is productive, the elite understand that missing trades is not failure, it is risk management. They have internalized that entering under suboptimal conditions compromises long-term results, and every decision to wait reinforces discipline and builds cumulative advantage. Observing their process reveals a pattern. They filter opportunities rigorously, evaluating not only the chart, but also the broader context, volatility, liquidity, and market behavior. They allow setups to mature fully, avoiding premature action that can reduce profitability. Every tick that does not meet their criteria is ignored without hesitation. This selectivity is central to strategic patience. It is not passive, it is deliberate and highly active in mental engagement. Emotional control is inseparable from strategic patience. Fear of missing out, overconfidence, impulsivity, and revenge trading are neutralized because elite traders have conditioned their minds to prioritize probability over impulse. The market no longer dictates their emotions, they dictate their engagement with the market. This internal alignment is the invisible edge. While two traders may see the same chart and understand the same strategy, the difference in outcomes is often purely psychological. One acts impulsively, driven by emotion. The other waits with disciplined control. The 1% also use patience as a filter to enforce quality. Only setups that meet strict criteria are executed. This reduces exposure to suboptimal trades and enhances overall expected value. Every rejected opportunity reinforces the discipline, while every accepted trade meets all probability and risk standards. This is where patience transforms from an abstract concept into an applied, measurable advantage. Furthermore, strategic patience enhances perception and understanding of market behavior. By observing the market without acting impulsively, traders gain insights that are unavailable to those who are constantly reacting. They recognize patterns, volatility shifts, and subtle signals that can guide future decisions. This observational skill builds intuition, timing, and confidence, creating compounding psychological and practical benefits. The elite also understand that profit is not measured by frequency, but by probability-weighted outcomes. Trading constantly without alignment may occasionally produce small wins, but these are often outweighed by losses incurred through impulsivity and misalignment. Strategic patience ensures that each trade taken has a higher expected value, and over time, this difference compounds into significant advantage. The ability to endure boredom, market stagnation, or missed opportunities without emotional interference is a defining trait. Many traders misinterpret stillness as wasted time, but the 1% view it as preparation, analysis, and alignment. Their mind is continuously engaged even when hands are still. They rehearse potential scenarios, evaluate multiple outcomes, and maintain mental discipline. This is why their actions, when taken, are precise, confident, and consistently profitable. Another key aspect is the management of internal states. Patience requires self-awareness and self-regulation. Elite traders monitor subtle signs of impatience, restlessness, or fear and adjust accordingly. This conscious observation prevents premature actions, reduces errors, and strengthens psychological resilience. Over time, this becomes habitual, and strategic patience becomes reflexive. The discipline is reinforced through repetition and consistency, creating an invisible advantage that accumulates silently. Strategic patience is also integrally linked to risk management. Premature entry increases exposure and reduces expected value. By weighting the 1% align risk with opportunity, allowing probability to work in their favor, each calculated decision reduces unnecessary exposure and enhances long-term profitability. It also transforms the perception of gains and losses. While most traders fear missing opportunities, elite traders understand that avoiding low-probability trades protects capital, reduces regret, and allows resources to be deployed in higher probability scenarios. Patience is therefore not passivity but a highly active, conscious, and disciplined approach to controlling engagement with the market. Finally, strategic patience builds compounding mental and practical advantages. By consistently waiting for alignment, observing market behavior, and executing only under optimal conditions, the 1% ensure that each action taken carries higher expected value than any impulsive alternatives. This creates consistency, reduces emotional fatigue, and builds confidence. Strategic patience is the invisible edge, the differentiator that allows elite traders to consistently outperform the majority. It is not flashy, it is not rapid, but it is relentlessly effective. Mastering it transforms trading from reactive and emotional to deliberate, disciplined, and elite. The biggest enemy of the trader is not the market, it is their own emotions. And this fact is what separates the 1% from the 99% who struggle and eventually fail. Strategic patience is not simply about waiting, it is about understanding the inner psychological forces that drive impulsive action and learning to control them with precision. While the majority of traders are caught in cycles of fear, greed, boredom, and overconfidence, the elite recognize these impulses as signals, not commands. They see the tremors of excitement, the pull of impatience, the whisper of FOMO, and the sting of regret, and they understand that these are not indicators of market truth, but of internal distraction. Most traders act on these signals unconsciously. The slightest spike in price triggers anxiety, and they click, buy, or sell, as if the market demanded it, only to realize later that their decisions were guided not by strategy, but by emotion. The 1% approach this differently. They treat every internal impulse as information, not instruction. Every urge to act is measured, evaluated, and either dismissed or disciplined. They cultivate self-awareness to the point where emotional interference is minimized, and each decision becomes a reflection of strategy, not reaction. Emotional discipline is reinforced by understanding the consequences of impatience. Impulsive trades erode both capital and confidence. Each loss, small or large, feeds anxiety, which compounds the likelihood of further impulsive behavior. The 1% are aware of this feedback loop and deliberately avoid it by applying mental rules that prevent action unless conditions align with their high probability criteria. They understand that psychological resilience is just as important as technical skill or strategy, because without control over emotions, even the best system will fail. Fear, in particular, is a powerful motivator for impulsive trading. Fear of missing out, fear of loss, fear of underperformance drives most traders to action before opportunity has fully developed. The 1% respond differently. They accept fear as part of the process, but refuse to allow it to dictate behavior. By observing fear without reaction, they convert it into information that can refine decision-making. Greed is equally dangerous. The desire for quick profit pushes traders into trades that are misaligned with probability, risk, and timing. Elite traders recognize this impulse and have created a system where greed is irrelevant. By focusing on disciplined patience, they avoid the traps set by emotional desire. Boredom is another subtle but powerful force. The human brain craves stimulation, and when the market is slow or conditions do not meet criteria, impatience arises. Most traders interpret this boredom as wasted time and act to fill the gap, entering low probability trades or adjusting positions unnecessarily. The elite reinterpret boredom as opportunity. Waiting is productive because it allows setups to mature, patterns to develop fully, and probability to align with their framework. Every minute of stillness is reinforcement of mental discipline and preparation for future action. The 1% also understand that patience is strengthened by practice, observation, and reflection. It is not innate, it is cultivated through repeated awareness of emotional triggers and consistent enforcement of rules. They track their impulses, identify weaknesses, and systematically improve their capacity to wait for optimal setups. This creates a compounding psychological advantage over time. Strategic patience is also inseparable from risk management. Acting impulsively increases exposure and reduces expected value, while disciplined waiting ensures that each trade taken meets strict probability, risk-reward, and alignment criteria. By waiting, the elite maximize the expected outcome and minimize unnecessary losses. Every trade becomes a calculated decision, executed with confidence and clarity. Another critical aspect is self-trust. The 1% develop confidence not through ego or past wins, but through consistent adherence to mental rules. They trust their framework, their process, and their ability to wait for alignment. This trust allows them to remain calm under pressure, ignore market noise, and resist the temptation to chase movement. It also prevents the cycle of revenge trading that ensnares impulsive traders. Patience in the face of market swings strengthens identity. Elite traders identify not as reactive participants, but as disciplined, observant, and deliberate operators. This identity shift is subtle but profound. It changes how they perceive gains, losses, and opportunity. They no longer fear missing out because opportunity is abundant, and the quality of execution outweighs the frequency of trades. Strategic patience also enhances learning and intuition. By observing the market without acting impulsively, traders gain insights that reactive participants miss. They notice subtle shifts, patterns, and behaviors, internalizing lessons without risking capital. This observational skill reinforces both confidence and predictive ability. Over time, this cumulative advantage becomes significant. The market may present dozens of small opportunities, but each impulsive trade carries risk, and cumulative misalignment erodes profitability. The elite filter these opportunities, waiting for conditions that meet all criteria, allowing probability to work in their favor. This filtering is invisible, counterintuitive, but relentlessly effective. Another often overlooked benefit is emotional recovery. Because the 1% act selectively, they experience fewer losses and emotional swings. This allows for clearer thinking, consistent performance, and reduced stress. Emotional stability is itself an advantage in a market dominated by reactive participants. The psychological discipline of strategic patience also translates into risk control beyond individual trades. Elite traders understand the compounding effects of repeated impulsive errors and structure their behavior to prevent these. They do not attempt to control the market, they control themselves. Every trade, every decision, every moment of observation reinforces the process, creating a feedback loop of discipline and confidence. The 1% also reframe mistakes differently. When a trade is missed, they see it not as a loss but as avoidance of unnecessary risk. When a setup fails to align, they view it as confirmation of the importance of their rules. This perspective reduces regret, reinforces discipline, and strengthens mental resilience. In contrast, average traders react emotionally, allowing losses and missed opportunities to drive impulsive behavior. The edge of the 1% is therefore invisible, psychological, and cumulative. It is not flashy, it does not rely on rapid action or constant engagement, and it is counterintuitive because it contradicts the human instinct for immediacy. Yet it is the factor that produces consistent long-term success, turning potential volatility into predictable outcomes. Understanding and internalizing this principle transforms trading from reactive, emotional, and inconsistent to disciplined, strategic, and elite. The mastery of patience allows the 1% to filter opportunities, control emotions, and maximize probability, creating an advantage that compounds silently but relentlessly over time. The edge of the 1% trader is invisible, subtle, and profound, and it is found entirely in the mastery of strategic patience. While most traders are consumed by the need to act, to constantly adjust, and to react to every small market movement, the elite understand that the market is not a race, but a series of opportunities to be captured selectively and deliberately. They understand that time is an ally and impatience is the hidden enemy, silently eroding potential gains and amplifying risk. Every aspect of their trading is built around this principle, observing without action until conditions align perfectly, controlling impulses, and executing decisions only when probability, risk, and timing converge. This approach is counterintuitive because human instinct rewards movement, engagement, and immediate gratification, yet the elite have rewired their behavior to see value in stillness, preparation, and selective action. Every moment of waiting is not wasted. It is reinforcement, rehearsal, and alignment. While average traders experience every tick as a trigger to act, experiencing highs of excitement and lows of fear, the 1% experience calm focus. Their minds are engaged continuously, yet their actions are minimal, precise, and high value. This internal discipline allows them to see opportunities invisible to those trapped in impulsive cycles. The psychology behind strategic patience is critical. Fear, greed, FOMO, and boredom drive most traders to make decisions that are suboptimal and costly. The elite recognize these emotional triggers not as commands but as data, and they apply deliberate mental rules to neutralize them. Fear of missing out is reframed. Missing a trade is not a failure, it is risk management. Greed is controlled. The desire for quick profit does not compromise alignment with high probability setups. Boredom is embraced. Stillness is preparation, observation, and strengthening of mental discipline. This emotional mastery creates consistency, reduces stress, and enables confidence that is invisible yet powerful. Every decision to wait strengthens internal rules, every trade taken reinforces probability alignment, and every rejected trade eliminates unnecessary risk. Over time, this cumulative advantage compounds quietly, creating measurable outcomes that separate the 1% from the average trader. Strategic patience also amplifies learning. By observing without impulsive action, traders gain insights into market behavior, volatility patterns, liquidity shifts, and subtle dynamics that reactive participants miss. These observations build intuition, enhance timing, and improve predictive ability, creating a feedback loop where patience directly improves skill. Risk management and patience are inseparable. Acting too early without alignment increases exposure and reduces expected value. The elite understand this fully and align every trade with pre-defined criteria that maximize probability and minimize unnecessary loss. This disciplined alignment creates compounding advantage over time. Confidence is another product of strategic patience. Elite traders trust their framework, their rules, and their judgment. This trust is not ego-driven but process-driven, allowing them to remain calm under pressure, ignore market noise, and resist impulsive urges. Confidence generated in this manner is stable, durable, and reinforces continued patience, creating a virtuous cycle of disciplined decision-making. Boredom, often feared by average traders, is interpreted differently. The 1% use periods of inactivity to reinforce mental patterns, rehearse potential scenarios, and strengthen observation skills. This turns idle moments into productive mental work, enhancing clarity and reinforcing the edge. They understand that missing trades does not reduce profitability, acting outside alignment does. The market itself becomes a teacher, and every observation without action strengthens discipline and understanding. Another critical aspect is the compounding effect of patience. Every impulsive trade avoided preserves capital, prevents small losses, and maintains high expected value for future opportunities. Every trade taken with full alignment maximizes probability and potential gain. Over months and years, this repeated practice compounds into a measurable advantage that separates consistent winners from the majority who fluctuate and lose. Strategic patience also protects mental state. Emotional swings, stress, and anxiety are minimized because actions are deliberate and rules-based. By controlling engagement with the market, the elite maintain mental clarity, which further reinforces high-quality decisions. Mistakes, when they occur, are treated differently. Missing a setup is recognized as avoidance of unnecessary risk. A trade that does not meet criteria is discarded without regret. This perspective reduces emotional interference, strengthens discipline, and ensures that psychological fatigue does not erode performance. The elite also recognize that the edge is invisible. Outsiders may mistake stillness for inaction, boredom for hesitation, and observation for laziness. In reality, these moments are active mental engagement, filtering, and preparation, and they are precisely what generates long-term profitability. Strategic patience is therefore both shield and weapon. It reduces exposure to loss while creating opportunities for outsized gains. It is counterintuitive, uncomfortable, and requires deliberate cultivation. Yet it is the single factor that consistently separates elite traders from the rest. Mastery of this principle transforms trading from reactive and emotional to deliberate, disciplined, and elite. Each decision is the product of mental frameworks, probability alignment, and emotional control. Each moment of waiting reinforces identity, confidence, and skill. The 1% understand that the market will continue to provide opportunities, and missing low-probability trades does not reduce long-term profitability. Acting impulsively, however, can have compounding negative effects. Patience ensures that probability works in their favor over time. The ultimate edge of the 1% lies in this invisible, psychological advantage. They do not rely solely on indicators, charts, or strategies. They rely on mental discipline, self-control, and selective action. Their patience allows them to execute with precision, avoid unnecessary loss, and compound advantage over time. Observing their process, it becomes clear that patience is not passive, it is the active engine of their success. They are mentally engaged, disciplined, and deliberate, yet physically still, acting only when conditions are optimized. This creates an invisible edge that accumulates silently yet relentlessly. Mastery of strategic patience transforms the way a trader views opportunity, risk, and success. It turns waiting into an advantage, observation into skill, and discipline into compounding profit. It separates consistent winners from the impulsive majority. It is the foundation of the 1% trader's edge, the ultimate differentiator, and the principle that, once internalized and applied, produces predictable, long-term profitability in a market that rewards discipline, patience, and strategic action above all else. The 1% understand that the market is probabilistic, the human mind is fallible, and patience is the bridge between knowledge and consistent execution. This is the invisible weapon, the psychological fortress, and the engine that drives elite trading performance, and it is available to anyone who chooses to cultivate it, practice it, and enforce it relentlessly in every decision, every moment, and every trade. Strategic patience is the ultimate edge, and mastering it is what transforms ordinary traders into the 1%.